What's going on, everyone? Charlie here. Happy Saturday and happy weekend, everybody. We're going to talk about NSCC 803, and in this one, we're going to take a look at new membership categories and overnight SFTs. Now, SFT is the new service that's going to be provided by the NSCC, basically a securities lending service. Now, it says right here, when evaluating the opportunity to expand its clearing offerings to SFTs, NSCC engaged in extensive discussions with numerous market participants, including agent lenders, brokers, institutional firms, and critical third parties such as matching service providers and books records service providers. NSCC also organized several industry working groups to discuss the possibility of clearing SFTs. Each constituency had a unique perspective on the proposed SFT clearing service. By capturing their different viewpoints in the design, NSCC has sought to ensure that the proposed SFT clearing service would reflect their needs and facilitate industry adoption of the proposed SFT clearing service. Now, they basically go on to say that there's a lot of discussion, a lot of different ideas were put forth, and basically they decided to take into account both sides of the equation. A lot of participants were expressing interest in allowing members to sponsor institutional firms into the NSCC membership, similar to how the FICC does this with their sponsoring membership program. Now, under FICC's program, sponsoring members may submit to FICC transactions entered into on a principal-to-principal basis between the sponsoring member and the sponsored member. Now, FICC's sponsoring member / sponsor member program also allows sponsoring members to submit to FICC transactions entered into between a sponsored member and a third-party netting member. However, based on feedback from market participants, NSCC has decided to address this type of trading via the proposed agent clearing model for SFT. We'll get to that later. Now, on the other hand, other market participants, including particular certain agent lending banks, requested that the central clearing service accommodate agent-style trading, and that is where the agent lender enters into the transaction on behalf of the institutional firm rather than the principal counterparty. As NSCC understands it, agent-style trading is the way such agent lenders are typically approved to transact in securities lending on behalf of their institutional firms today. That's the problem. Then we see a footnote here that says NSCC decided at this time not to incorporate a direct model for institutional firm clearing into the proposed SFT clearing service because in its experience with a similar model in FICC or the CCIT service, the requirements that a clearing agency such as NSCC would be required to apply to an institutional firm that participated as a direct member or clearing fund would, as a general matter, not likely be compatible with the regulatory requirements and investment guidelines applicable to many of the regulated institution firms that NSCC anticipates would be interested in participating in the proposed SFT clearing service. Now, a quick summary of this real quick. Some participants want the agency model, some want the principal model. Now, if you take a look at each model, the principal trading model is when a brokerage completes customers' trade using their own inventory, and an agency is when they go and transfer between different brokerages, basically creating new members for the NSCC. So basically, after taking into account both sides of the equation, they decided to go ahead and incorporate, I believe both is what they say. It's a little confusing because they say here that they're going to incorporate both, but then they also say that they're not going to be incorporating the institutional firm clearing, which would be the agency clearing. So it appears to me that they may try to go to a principal clearing model, which would be amazing because principal traders buy and sell assets out of their own account, thereby serving as a consistent source of liquidity and facilitating orderly trading and or market makers. So that'd be a lot better if we could have, instead of lending, if we could have these market makers actually buying securities like they're supposed to be. That would be great. And by the way, the basic act of clearing involves matching buys and sells. Once the transactions are executed on the exchange, details of the trades are sent to the NSCC and subsequently recorded and matched for accuracy. Now let's talk about overnight SFTs real quick. So NSCC is proposing central clearing for SFTs with one business day term ineligible equity securities that are entered into by members, institutional firms that are sponsored into NSCC by sponsoring members, or agent clearing members on behalf of customers. NSCC has determined that overnight term SFTs with a daily pair-off option are more appropriate for the proposed model than open transactions with mark-to-market collections. This is because, as NSCC understands it, open transactions are not eligible for balance sheet netting, given they do not have a scheduled off leg / settlement date. So they don't want things sitting there without a settlement date. They want to be able to net down their capital requirements. And then they give you an example of what they're talking about right here, which we can actually map out right here. So we have the transferee and the transferor. And on Monday, the transferor sends 100 Chime shares over to the transferee for $100 a share. They swap back the next day, and then the NSCC facilitates the rate payment. And that's pretty much all this one is. Just a quick summary. This one talks about the different models that they could go about implementing. There's two different kinds that they talked about, the agency clearing model and then the principal to principal clearing model. It appears they may try to incorporate both, but they may lean more towards the principal side. We'll have to see. We could get some more hints later in the filing. Then we also talked about overnight SFTs, basically an overnight swap or securities lending repo, which is outlined right here. That's basically it. So far, so good. I'll let y'all know when I get the new one out. Take it easy.